Now I'm pleased to introduce Radko Albrecht, who is the founder and CEO of Bitbond, which specializes in asset tokenization and digital asset custody technology for banks and financial intermediaries. Radko is here to share his experience on fiat-backed stablecoin issuance and specifically the process from issuance to settlement to custody. So welcome, Radko. The floor is yours.
Great. Thank you so much. It's a pleasure to be here. I'm Radko. I'm the founder and CEO of Bitbond, and I'm going to talk about fiat-backed stablecoin issuance, primarily in the context of commercial banks. And I'm going to show a couple of background information and going to dive deeper into how fiat-backed stablecoins can happen and show how we have already implemented it. But first of all, I would like to start with a quick introduction into tokenization. I assume it has been a topic already, but just to familiarize ourselves with some of the key terms here. And by the way, this is a relatively long presentation. I'm not going to discuss each and every slide, but I assume that the audience will receive the material afterwards. So also for documentation purposes, there's a couple of slides, but we won't be covering each and every one of them. So let's get going with a quick introduction into tokenization and our role here as Bitbond. So Bitbond is a technology company. We provide software as a service technology in the area of tokenization and digital asset custody. We've been doing that since 2013, so we have some relatively comprehensive experience in the field. And we were in the fortunate situation to run the very first security token offering in Germany and in Europe as a whole. We were the first company that received approval from the German financial regulator BaFin to issue a completely dematerialized security, which in our case was a bond. And so we have a lot of first-hand experience, not just as a technology provider, but also as an issuer when it comes to digital securities. And of course, this is not yet stablecoins, but I'm going to elaborate a bit more why this is also relevant for stablecoins. Now, when we think of tokenization first, what are the advantages and benefits of tokenization? Essentially, tokenized securities can move as easily as email can move. And when you compare that to a physical letter, the email arrives instantaneously. You don't really care whether the recipient of the email is in the same room with you or on another continent. And the same is true for tokenized securities. Traditional paper-based securities move very slowly. Settlement is cumbersome, even though a lot of it is electronic already, and you actually don't have to send a physical paper-based security. The settlement process in the background still is as if you actually had a physical document. And when you tokenize the security, you effectively tokenize the proof of ownership in that security, and then you can send it as easily as an email. So a lot of banks, a lot of issuers, a lot of investors are highly interested in tokenization. This slide just shows in a slightly more technical manner what actually happens. On the left-hand side, you see the legacy settlement process with a lot of intermediaries. The main one being the Central Securities Depository, which will typically hold a central certificate of the security. And on the right-hand side, you can see a blockchain-based process where you could even do a peer-to-peer transaction, just like we know it from cryptocurrencies, for example, where you can send a security token from an issuer to an investor directly. Now, this is also the first time when the stablecoin comes into play, when you can send the security as a token and you settle the payment traditionally through a bank transfer, for example, then these two transactions are detached. But what you actually want to achieve is you want to wrap the delivery of the security and the payment for that security into one transaction. And that's what you need a stablecoin for. And that's what we're going to look at a bit more detail throughout this presentation. Tokenization is only in a very early stage. However, we believe that medium to long term, and we're roughly looking at a 5 to 6 year horizon here, pretty much all financial assets will be tokenized. Bonds and equities certainly being the ones that are most relevant today, but also in the future, other financial assets such as loans or private transactions will be tokenized. And we're very convinced that this is just the beginning of this evolution. And if we all agree on that, and we believe that tokenization has so many benefits that assets will be tokenized medium to long term, then we can all imagine that there's also a big need actually for stablecoins. Now, what's the role of Bitbond in this whole tokenization development? Well, we provide 3 technological modules that allow banks and larger issuers to actually take advantage of tokenization. And we deliver our technology in 3 software modules. The first one is the digital asset custody technology, which allows you to safekeep tokens and allows you to provide custody services to your customers. The second is the asset tokenization module. This allows you to issue security tokens on different protocols and manage their life cycle. And then there is the third module, which is the on-chain payments module. And this is the module that is most relevant for this talk, because this allows banks and e-money institutions to issue a digital euro or also other currencies like a digital dollar or digital pound sterling by using our software. And so we are a software as a service provider. We're not a stablecoin issuer ourselves. We're not a custodian ourselves. We rather provide banks and financial institutions with the technology that they need in order to issue tokens, safekeep tokens, and also issue digital money. So now coming more to the motivation why we actually need stablecoins. I just alluded a little bit to the fact that there are tokenized securities, and if you really want to settle them efficiently, then you also have a digital payment method, such as a digital euro. And again, you can think of a euro here as a proxy for pretty much any other fiat currency. When the investors have a wallet, which they need anyway in order to invest in the security, even if they don't control that wallet themselves, but they work together with a custodian, then automatically they can hold other digital assets as well. So there is no technical obstacle for them to actually also hold a stable coin. And in that case, the whole benefit of tokenization can be fully utilized when you create that instant delivery versus payment mechanism. And here in this table, we actually compare the 3 different options how securities and also other financial assets can be settled. The first one is you have a conventional asset, which is, for example, centrally deposited, and you have conventional payments. Then you have a T+2, sometimes even longer settlement with leveraged loans or syndicated loans. You may know it's sometimes 20 or even 30 days. And this longer settlement times create counterparty risk and create complexities that typically both issuers or sellers and investors would like to avoid. Now, when you go one step further and you tokenize the asset, then you can settle the asset instantaneously. However, the payment will still take 2 to 3 days. So the counterparty risk for the seller, for the issuer, still exists. And only if you have an on-chain payment method, such as a stablecoin, then you can create a instant delivery versus payment mechanism. A more technical term for that is also a atomic swap. And then you can fully automate transactions. You can even program transactions ahead of the time into a smart contract, where, for example, when you have a derivative, which typically would trigger contingent payments based on the price development of an underlying asset, then when you have a stablecoin, the smart contract could also trigger the payment automatically, and you wouldn't need to build some form of a bridge into a bank transfer such as a SEPA or SWIFT payment. So ultimately, this means that stablecoin enable tokenization to reach its full potential. So they have a very important role to play in this whole development of tokenization. Now let's take a quick look at issuance technology and process. First of all, you need a protocol on top of which you can issue stablecoins. Ethereum, of course, today is one of the most popular protocols when it comes to tokenization in general. However, at Bitbond, of course, I wouldn't be speaking here today if we also were not familiar with Stellar. And when we did our security token offering back in 2019, we did a pretty comprehensive evaluation of different protocols, specifically for the use case of payment processing and token processing. And back then we came to the conclusion that Stellar is actually one of the most favorable protocols out there, simply because it's so optimized specifically for these use cases. Stellar does not have a few functionalities that Ethereum has got, but that's not relevant when you look at asset settlement and payment settlement, because it's highly optimized for that use case. And so when you want to tokenize and when you want to create stablecoins, of course, it makes sense to evaluate, a lot of the protocols that are out there. But I think it's fair to say that Stellar is definitely one of the top protocols to be used, simply because it's highly optimized for that use case. So that's one important component that you need. And then, of course, you can compare different protocols by different criteria, but ultimately, again, Stellar in many instances is the protocol of choice. Some of the reasons are scalability and low transaction costs. Ethereum right now, when you send a token on top of Ethereum, it might cost you $10 to even $20, which can make the transactions prohibitively high, especially when you think about the retail context where you send relatively small values per transaction. So in conclusion, we often recommend Stellar, and actually many banks have already chosen to work with us and to go with Stellar when they tokenize assets and when they issue stablecoins. Now, the tokenization, on the one hand, when you tokenize an asset, it can happen through a manual admin panel that we provide. At the same time, for the issuance of a stablecoin, the admin panel is more of a monitoring tool, and the issuance, so the minting and burning of the stablecoin, happens in a fully automated way. So when someone would deposit 1,000 euros to a reference bank account, and these 1,000 euros should be credited as a stablecoin, then a minting process will be triggered through our software, and 1,000 stablecoins will be credited to the wallet of the investor. And equally, when there is a withdrawal, then the investor would trigger a withdrawal and specify a bank account where they would like to receive the money. In the background, the stablecoins get burned, and a fiat payment is triggered from the reference bank account to the bank account of the user. And so this automated minting and burning is what our software is doing. And it's making sure that the balance of stablecoins and the amount of fiat money in the reference bank account always stay in sync. Because this is the biggest risk that you can run when you want to issue a stablecoin, is that your outstanding stablecoin balance is not in sync and is not 100% equal to your actual fiat balance. And so that's why it makes sense to use a software like ours for this process, because then you have an automated way, including a necessary audit trail. Now let's take a quick look at a legal perspective. Of course, this depends on the jurisdiction where you're in. And of course, it also depends whether you are the central bank, which can basically print money and has control of the money supply, or whether you're a commercial bank or even an e-money institutions. Now, in Europe, or specifically in the European Union, there is the concept of e-money, which of course also exists in other jurisdictions. So probably it can be applied in a similar way. And the good thing is that e-money is a well-known concept for many years and something that banks and financial market participants are familiar with. And those banks that we already do work together with regarding stablecoin issuance, they will typically structure the stablecoins as e-money from a legal perspective. And therefore, with their existing license and under the existing regulatory framework, they can issue stablecoins. So they don't need to, come up with new regulations, come up with new licenses. They can use what's already there in order to issue stablecoins. And this is a big advantage because it really speeds up the process for banks for the issuance and when they want to launch this. Now, the other aspect that is highly important is the aspect of custody. When you want to deal with tokenized securities and with stablecoins, then you need a custody solution. Of course, ultimately, holding a digital asset means to have the private key that belongs to the public key where your assets are. But if you don't have a wallet or a custody solution from which you can check your balance, initiate transactions, and also initiate a certain set of compliance rules, then your tokens are relatively worthless. Just like a car that has no wheels. When you have a car and it has no wheels, I mean, the car probably makes 98 or 99% of the value, and the wheels just make 1 or 2% of the value of the entire vehicle. But if the wheels aren't on it, you can't really move the car. And so that's an analogy that I like to make between tokens and a custody solution. There's a lot of people out there actually that already have custody, for example, by owning a wallet on blockchain.com or on Coinbase. And right now there's around about 50 to 60 million people around the world who, through the ownership of Bitcoin and other cryptocurrencies, are actually already familiar with a custody solution. However, there isn't a lot of banks yet that would provide custody. And I think that a lot of banks over the next 2 to 3 years will actually enter into the business of providing custody for digital assets. And the good thing is, it doesn't matter whether you start with tokenized securities, stablecoins, or digital currencies. The underlying technology is very, very similar. So when you start with one type of asset, you will typically be able to provide custody also for the other types of assets. Ultimately, custody means secure key management. There are several ways to do that. We don't need to dive into the technical details right now. The short message is you will need to find a good solution for the key management part to make it secure, which is one very important aspect, but also to be able to apply certain governance rules around the custody solution, where you have, for example, a multi-signature approach so that higher value transactions can be approved by higher level of hierarchy within an organization such as a bank. And so we typically help banks to establish these governance rules and to configure the underlying technology so that the governance rules are in compliance with the typical bank internal rules. But of course, ultimately, the solution needs to be convenient for the end customer, which in many cases are also retail customers. But the same is true also for institutional investors, institutional clients. So ultimately, at the end of the day, everybody is familiar with an online banking account, and the solutions that we provide really follow the same logic. Only under the hood, you have digital assets and not centrally deposited securities, and not fiat money that is channeled through conventional payment systems such as SWIFT, for example. So finally, I would like to come to a conclusion with a use case. There are several use cases that we could present, but in order to be conscious of the time, there's just one that I would like to present now. One of our clients is Bankhaus von der Heydt, which is a Munich-based private bank. It's a relatively small private bank that is highly focused on securitization. So when an investor comes to Bankhaus von der Heydt and says, well, I have a portfolio of these real estate properties and I want to bundle them into one security. So I don't need to take ownership of each and every property, but I simply own one security, and that securitizes the entire portfolio for me. So this is their typical course of business. They wanted to speed this up with the help of tokenization, but they ran into the issue of, you know, you have a tokenized asset, but you would also need to have the payment settlement tokenized. And so for them, we have developed and delivered our on-chain payments module, and they actually already went live with a stablecoin, which they can utilize in all of these payment transactions. So we have first-hand experience, not just on a theoretical level, but also what it actually means to deploy a stablecoin into production under a regulated environment. And with this, I would like to conclude, and happy to discuss any questions that you may have, or any comments to the presentation.
Great, thanks so much, Radko. Really informative. I have two questions that are sort of related, I think. Could you talk a bit more about best practices for custody and how a bank should, how should a bank securely manage their virtual assets?
Yes, so in our view, what really has already developed into a best practice is the utilization of a technology that is called MPC, which stands for multi-party computation. Essentially, MPC allows a bank to apply relatively sophisticated governance rules around safekeeping of keys. First of all, it abstracts from the concept of a private key. So you don't have one single point of failure anymore, but the private key is not even generated in the first place, but you have so-called shares, which you can think of individual components that together would in combination create the private key. And you can have a 3 out of 10 signature, for example. So you would allocate 10 employees of a bank to participate in the approval and signing of transactions, and you always need 3 out of these 10 as a minimum to approve a transaction. Then you can apply more sophisticated rules around value. Of course, you don't want to bother everybody in the organization with a 10 euro or 100 euro withdrawal. But if the withdrawal is above 100,000, above 1 million, only then you would want to involve certain checks. And so these types of rules can be implemented with MPC in a purely software-based manner. And so this is one of the core best practices that we have seen and that we have utilized with banks, because it allows you to apply security and very sophisticated governance.
Great. One last question. The BBDH Euro deployment that you spoke about, could you talk a little bit more about how that's being used today?
Yes, sure. So the stable coins that may be relatively well known to the public, such as Tether or USDC, these stable coins have primarily been created to be used as a means of payment on crypto exchanges, for example. And these stable coins have relatively high market caps, and are being very frequently used in trading. The stablecoin of Bankhaus von der Heydt has not been created in order to be used in large volumes publicly. Right now, it's primarily utilized between the bank and its institutional customers in order to make payment transactions of securitizations and similar institutional transactions more efficient. So this delivery versus payment mechanism is pretty much at its core. An institutional investor, for example, buys a security, and then that payment settlement is done through a stablecoin. And so it's currently used primarily almost as an internal payment settlement tool. There's a good chance that the stablecoin specifically by this bank will also be used outside of the business of this bank. But so far, it's only planned in an institutional context. So right now, they don't plan to issue this as a stablecoin that would be utilized by retail. But of course, this is a decision that every issuer of a stablecoin can make independently, right? This is not a technical restriction. This has rather, this is a commercial business decision, and it's also a compliance decision. But I'm just describing how they do that. And ultimately, it's of course the decision of the issuer of the bank how they want to issue and utilize a stablecoin that they want to use.
Yep, that makes sense. Great. Well, this has been really insightful. Thank you so much for your time, Radko. Much appreciated.
It's been a pleasure. Thank you so much.